Jitendra Shriram, Director and Head of Research with HSBC Securities, joins us live now. Jitendra, good morning. Thank you for joining us. Jitendra, the Cyprus issue clearly seems to be disturbing global markets. Now, Cyprus is a small country. Why is that small news flow impacting just about every major global market?
Good morning. Well, I think there are two things. One is, if you look at what happened when the Greece bailout was done, it was supposed to be like a one-off and probably not to be kind of replicated and so on. But with Cyprus, you are again seeing a kind of a $10 billion bailout. See, the quantum of money is not important, but it clearly brings back the concept of, again, risk on and the concern that has been there in the market. In a sense, what is happening is when on Tuesday morning, as per the current plan prescribed, most depositors would end up losing, if they have over 100,000 euros in their account, they would end up losing about 10%. Or if it is under 100,000 euros, they would end up losing about 6.75% if the numbers serve me correctly. But broadly, that is the extent of loss that you would see across deposits. So it's again brought back the whole concept of risk aversion back to markets. And it will obviously have its contagion impact going into rest of Europe as well. So to that extent, what you're seeing is a nervous reaction from equity markets to this weekend development.
Jitendra, hi, morning. We've also got the policy as well to deal with come tomorrow. What do you think is the market pricing in?
Well, I would say this week is quite eventful in a sense. Apart from the Cyprus development over the weekend, I think there are two other important events for the market. One is clearly that ever since January, if you look at the most material part of reforms that the government's been doing, it has been on fuel prices. And I think one big disappointment that investors have had has been on Friday. There was no tinkering on diesel prices. And, whether we should wait it out probably for today. But the fact is, so soon, whether into 2 months, probably post the reform announcement, if you're losing the momentum in a sense that diesel, there is still an under recovery. And if you're not hiking prices in sync with what was spoken about, and it is clearly, not something that the oil marketing companies don't want. They definitely want a uptick in diesel prices. So that's something which has not come around, which has obviously caused some negative impact. Second is what you mentioned about monetary policy. It's a little tricky. We are obviously calling for about a 25 basis point easing going into the policy. But the fact is, fixed income markets don't seem to be pricing or probably the probability of a rate cut is being priced at a very low level given the kind of elevated levels of CPI and so on. So I would suspect that if you see a 25 basis point kind of a easing from the RBI, I would suspect that markets would probably stay where they are. But if it doesn't come through, I suspect we are heading southwards.
So, Jitendra, do you think Indian markets have hit some kind of an wall? 3 months ago, everything was looking good. Now, nothing is looking good.
Well, I don't think that is the case, but do bear in mind that the economic data in the interim has obviously been worse than expected. Third quarter GDP was clearly a shocker. We broke through the 5% mark as well when we posted that 4.5% kind of a read. My suspicion is that in the current quarter as well, given the kind of massive pullback in government spending, you have a very real chance that you will hit a pretty low number this quarter as well. So you have two back-to-back quarters of low, probably, hovering around that 5% kind of a mark, kind of a GDP growth. So I think equity markets are just discounting these kind of negative prints that are coming in as well. The hope is that, maybe in another 2 or 3 months, a lot of these social spending programs and so on announced by the government gets underway as the tenders and all come through. So hopefully by first quarter, at least you should start seeing the bottoming out effects on the growth rates.
Jitendra, if I keep Friday aside, US markets are in some kind of a mini bull run. News flow from Europe has improved. China is looking stable. So globally things are looking strong and Indian markets have gone nowhere. Suddenly if globally things reverse, do you think we run the risk of correcting rather severely on the downside?
It's obviously possible because, India even in the best of times remains a highly flow sensitive market given the acute current account deficit we run. And, in case there is a global, if the globe catches a cold, India is bound to have a big sneeze then. So in that regard, I would say, given the acuteness of our current account deficit, it obviously amplifies the moves either way.
Right. So Jitendra, give me 3 reasons why markets should go up, and I'll give you 5 why markets will come down.
Well, okay. One is, I would say, one reason to be constructive is the fact that whatever, whether it's 1 quarter out or 2 quarters out, I suspect that the economy is in a bottoming out phase. So clearly, whether it happens in 1Q of the next financial year, I would suspect that, we should start seeing an acceleration from here on. Market may take a little bit of time to, discount it, but I would suspect that is happening. Second is, even despite this kind of weakness, I would still say that, we are probably going to be seeing maybe about a 10 to 12% kind of a earnings growth for the market from here on, and already valuations are below historical means. So that is one more reason why, from a slightly longer term perspective, one should be looking at a more upward movement of the market than downward. And the third aspect I would say is that, clearly, given the kind of growth inflation trade-off that the RBI is juggling with, I would suspect they would play the card more in favor of growth at this point, given that core inflation has come off quite substantially. So I think there is enough reason for us to believe that at least there will be some kind of monetary easing. We can debate whether for the full year they will do 50 or they will do 75 here on, but the fact is I think it's going to be southward. So I would not be too pessimistic here on.
So where does one find value at this point? And do you think after the recent correction there are pockets which are looking attractive in terms of valuations, or do you think the market is going to give us better opportunities, purely indicating more downside?
Well, value-wise, the one thing that has happened in the market is whether, it is because of too much of growth of passive funds or whatever, there is a big disconnect between the frontline names and the second rung names. The frontline names, because of the, the proliferance of, ETF money and so on, has obviously got pulled up on valuation, and the second tier names have all, the disconnect in valuations with the frontline name has been very vast. So if you even dig past the top 30 names in India, probably you will have fairly decent value available across the board. Now, one will obviously need to cleanse that data for promoter pledges and various other overhangs that are there in the marketplace, but I'm sure there are enough names which will appeal from a value perspective. So I'm not saying, you may argue that, okay, the top 15, 20 names might be little expensive given historical means, but I don't think that is true for the whole market. So there are enough pockets which show value. I would still be positive on areas like energy sector. Because, end of the day, there is still some reasonable positive ground that we have achieved from mid-September. Secondly, I would definitely remain, reasonably positive on the private sector banks, or all this noise withstanding of last week. And also at some point of time, I would say that, exporters will continue to have this kind of, growth that we are looking at towards them. One area I would be a little concerned would be the durables space, the consumer discretionary items, because, I think clearly higher taxes, various kinds of punctures on the consumer wallet, whether it is, higher diesel prices, higher petrol prices, all that will have its impact on consumer discretionary items.
So let's discuss private banks. Since Indian private banks are largely dictated and dominated by foreign institutional investors, do you think Cobra post expose is really could be a trigger point or a turning point for them? Because most of the foreign institutional investors who invest in Indian equities, they always emphasize on governance. And since governance and KYC norms have been compromised, do you think in the near term private banks could go through a cycle of derating?
Well, a little bit of definitely this, overhang of all this noise that has come through last week will prey on the private sector banks. But the fact is, I don't think it is a systemic problem as such. You could have a little element of, this kind of, what shall I say, slush money going through or getting channelized through the banking. It's a constant battle for every financial institution to constantly battle this. So I don't think it is something which is Western world is not aware of. So I'm sure that I don't think that's going to cause a irreversible damage to the valuations of private sector bank. Obviously, near term, because of the noise flow, the bad press that it gets, it will have its sobering effect on the private sector banks in the near term. But I don't think it's going to be a restraining factor from a longer term. See, the big thing is whether the banks can continue to hold their ROE, their growth numbers and so on. And I don't see any reason to believe that, the names, the private sector banks will continue to grow. Even if I look at credit growth numbers itself, most private banks continue to grow at upwards of 20%. So I don't think that's going to be an issue there.
Let's nail it down to some names. After the recent price correction in the mid-cap space, have you identified any mid-cap names which suddenly look attractive? 3 months ago they were rich, but now after the recent correction, value has surfaced or value has emerged?
Well, there are some pockets of value that we continue to like. For example, in the energy space, for example, Petronet LNG is a name that we like a lot. Clearly, in the pharmaceutical sector, we have put out a note today which highlights IPCA as a name that we continue to like. So there are definitely pockets that emerge which are looking interesting. Similarly, ILFS Transport in the infrastructure space is one name that we like. So there are definitely pockets across various sectors that we like in the mid-cap universe.
A follow-up question on IPCA. Why do you like IPCA? If I look at the current operating profit margins of IPCA, they are the lowest in the industry.
Well, the fact is valuations are reasonable, and at the same time you have decent growth coming in for the company. So the earnings growth that we are seeing forecasting for the company, that's quite robust. So given the kind of valuations and the growth, I don't think it is fully discounted by the market. So that's why we are optimistic on the name.
Okay, good having you on the show, Jitendra. Appreciate you taking the time out and joining us.